Moving forward, we'll see evidences about purchase, payable, and inventory. Previously you are selling, now you are buying. So the cave crop will remain the same and the consideration will be the same also. He says that substantive testing of accounts payable and purchases. First of all, what is accounts payable? When we purchase something, we don't pay cash, we take a term to pay, then it becomes an accounts payable. It has two effects. Payable will create a liability, and you bought something, it will affect your purchase or inventory. So we will do the cave crop, transaction is complete. How we will do the transaction is complete? We are purchasing, right? So first we start with request for a quotation. Supplier send the quotations, we review, we may have a policy that we will compare 3 quotations and choose the best one. Then you will generate a purchase order. Some people say LPO if it is a local purchase order, and for international you might have IPO, international purchase order, right? Some people can do this way, so they can identify this is a local purchase or this is an international purchase, right? So purchase order, then of course when it's sent to the supplier, supplier will send the delivery with his delivery note and sale invoice. We'll put the GRN, good receipt notes, and based on that accounts payable is going to fill all the documents, and then the invoice in our system will be generated, right? So that is the completeness test, right? And I told you there might be a stamp you can put on a complete set of voucher that 1, 2, 3, 4 is available. If yes, then file is strong and we are the perfect account payable department. As an internal auditor you can do, because as an internal auditor you have to audit a lot of time to the same department, and you have to meet sometimes same people. So rather to fight and nuisance, you tell them, look, I will come, these things I will check. Before I come, you make sure, put a stamp, sign that all is attached. So one layer of work you are taking from the department itself, and once you go, you do random basis based on your suspicion level, that how much you doubt, or risk assessment basis. If more do it, less it will add value in the day-to-day life of a company. Reconcile, analyze, this is all the same procedures. Trace the transaction. There might be some unrecorded liabilities, means you bought something but you didn't put in your accounts in order to strengthen your balance sheet. Sometime liabilities will show that you are having a lot of payoffs, so it will weaken your strength. So a lot of people try to avoid the liability. You can search for unvouchered payables, that those who are not having supporting documents. There might be a suspense account. Sometimes we have suspense account, which means the transaction is not clear. So suspense file contain transaction, classification and treatment which are in doubt. So this is a very important file and you have to look into in more minute details. You will check the accuracy, and for anything you will ask for a management representation letters. Then according to the US GAAP, you will see this liability is properly valued or not. Maybe, like just an example, when we purchase something, there is a purchase cost, but there is a inward remittance, inward freight, till it reaches to your warehouse. So we say, as per accounting, all has to be added, and this will be a cost of asset, for example, or inventory. So we have to check that maybe accountant don't have good accounting knowledge, so he just took the purchase value. So we have to see that valuation is accurate or not. It really exists, and then for that we will do the confirmation. Depends positive or negative on your judgment. Sometimes you need a positive confirmation, mean any case they have to answer. Negative, if there is a problem, then they will answer, otherwise no need to answer. Then you will see auditor should use the activity in the account as a basis for selection. So you will see what is the activity, abnormal, normal, too much, too low. This is also important. Blank form of positive confirmation should be used. It requests the balance due. So sometimes there are two ways. I will make a confirmation letter and I will mention the amount, right? But this is payable, so more good is I should not mention any amount. So let the supplier write that what is the amount due, right? That will be another smart way to look into. That's why it says blank form of positive confirmation. Cutoff we already know. We have to also see the cutoff of the purchase, so we will go 7-8 days, 2 weeks ahead in the time. We'll see what are the shipping terms, then shipping terms, how it is settled, how it is recorded, because maybe you are free on board till destination. Means if someone sent from US to UAE, so till UAE it's free, but the accountant put the shipping cost, right? So this is also we have to see what was the shipping term, how the cash has been dispersed. This is also you have to see. Rights and obligation mean what is your obligation related to it, and it is what is your right in terms of suppliers. Does the balance of account pay reflect the liability of this entity, or you put liability of some other in your business, in your this company? So same way as we discussed for the sale, that sale for other company, cash collected for other company, you put in another company. That's also you have to inquire from management. You have to check that a purchase really occurs. This purchase we are only talking about of stock, then it's creating accounts payable. If it is a purchase for an asset, there is another way to look into. So you can watch the documentations. Classification, some people they buy something and they put it in the asset. You bought for example stock, and they say, oh yes, this is an asset, right? For example, this Toyota Motors, they buy cars and they sell cars. So if there is a new accountant who don't know accounting, he will say a car should be an asset, right? But it is not an asset for them, it is an inventory. So you have to see that it is classified in a proper way and understand the transaction, inspect the financial statement, evaluate the disclosures, that they are adequate, they explain the full story, or there are some mingle, hidden, bottom lines that you have to decide it. Inventory, it says, consists of the good held for resale by the client. So you have to be very cautious about it, that it's really a purchase or it's just an inventory came for display purposes. You will do the cave crop completeness test on it. This is for inventory, okay? Moving forward, like accounts payable and inventory. So some inventories can be given by your supplier just for a display. So you have to see, like, it is your right, obligations, transactions, completeness. You will apply the analytical procedure. You will do some stock calculations, ratios, analysis related to your turnovers, how many times you are selling your stock, and you will compare with other variables in order to see that this is a genuine inventory figure or not. Yeah, inventory turnover ratio, mean how many times inventory has been sold. Vertical analysis you will do. What is vertical? There are two types of analysis. One is called horizontal, vertical. One we say fundamental analysis, right? So it says the percentage of inventory to total assets. Then information from the client, previously prepared budget can provide the basis for the expectations. Means if you see the budgeting figures and the actual one, you can do variance analysis. That can also serve as an analytical procedure.